While everyone is panicking about stocks crashing, Bitcoin has already done its panic and is quietly sitting on a valuation that offers reduced downside risk. Everyone is freaking out about stocks right now. Oil prices are spiking, gas is getting expensive, and suddenly inflation is back in the room. It feels like the party is over. But if you look closer at Bitcoin, it's actually doing something weird. It's acting like it already knows the bad news is coming. Asset managers at Bitwise are saying Bitcoin is already priced in the scary stuff. They think the crypto market adjusted months ago. Stocks, on the other hand, they are just starting to wake up. The S&P 500 is dropping fast. But Bitcoin has been drifting lower since October. It's been quiet, it's been boring. And that might actually be a good thing. Think about it like this. Bitcoin is a reflexive asset. It reacts to money supply. It reacts to fear. It reacts to liquidity. When the Fed started hinting they wouldn't cut rates, Bitcoin felt it first. Stocks are slower. They are heavier. They take longer to move. So while everyone is panicking about equities today, Bitcoin has already done its panic. Now watch this. There is a metric called the Mayer multiple. It compares the current price to the 200-day average. It's a simple way to see if something is expensive or cheap. For Bitcoin, this number has been low since January. It's sitting in the lower percentiles of its history. That means the valuation is compressed. The price has reset. The hype has cooled down. In contrast, stocks entered the year at all-time highs. They were expensive. They were overvalued. And now that the macro conditions are getting worse, they are falling hard. But Bitcoin, it's already down. It's already adjusted. Luke Deans from Bitwise put it simply. He said assets that have gone through a valuation compression tend to have less downside risk. Why? Because the leverage is gone, the speculative positioning is unwound, the weak hands have sold. What's left is the core holders, the people who aren't selling just because the news is bad. This is the difference between a market that has been beaten up and one that is just getting started. Bitcoin has been beaten up. It's down more than 23% year to date. It's hovering below $70,000. It feels like a correction. But that correction happened early. It happened before oil prices spiked. It happened before the Fed changed its tune. Stocks are different. They are trading near cyclical highs. They are still full of leverage. They are still full of speculation. So when the macro catalysts hit, they have more room to fall. They have more vulnerability. And here is the subtle part. Bitcoin dominance is tightening. The altcoins are moving in lockstep with Bitcoin. The whole crypto market is acting like one single factor. It's driven by BTC's price. This means the market structure is cleaner. It's less chaotic. It's more focused on the main asset. This isn't about Bitcoin being a magic money printer. It's about timing. It's about who reacted first. Everyone suddenly gets bullish after one green candle. Then they panic after one red headline. But Bitcoin has been through this cycle before. It's sensitive to liquidity. It knows when money is tight. And it adjusted before the rest of the world caught on. If you are worried about downside risk, look at the charts. Stocks are falling because they are expensive. Bitcoin is stable because it's already cheap. The valuation compression offers a cushion. It reduces the risk of a massive drop. It's not that Bitcoin is safe. Nothing is safe. But compared to stocks, it has less room to fall. The bad news is already in the price. The reset is done, and here is the real story. The market is pricing in a 40% chance of no rate cuts this year. That's a huge shift from a few months ago. But Bitcoin already knew that. It's been drifting lower for months. It's been waiting for the dust to settle. So don't panic. Don't chase the dip. Just understand the timing. Bitcoin adjusted early. Stocks are adjusting late.